Hey traders, Joseph here from Eightcap. So today we're continuing to test out this double CCI. It's a trend continuation system. We did a post on it earlier in the week. Now Ethereum didn't really work out. Well, it hasn't just yet, but we are continuing to just have a look at it, and there's three markets we want to have a look at today that are starting to show some signs of a continuation. So just to recap, you basically it's rather simple, it's nothing new, it's been out there for a while. You want to see both CCIs above the zero, preferably you want to see the slower CCI above the zero before the faster CCI breaks above the 0 point, and you want to see the moving average pointing upwards. So we're looking at three markets at the moment today, and that's the EURUSD, gold and the German 30. So we can see the EURUSD here. We had a nice touch of rejection yesterday. That runs across nearly all the markets we're following today. It was after a late fight back on in the New York session, after what looked like sellers were going to take control. They were rejected, and we saw a pullback and then a positive finish after what looked like a down day. So we saw that rejection here, bounced off that moving average, and we're looking to see if buyers can break above the previous high from yesterday to fill a long, and we can see that the CCI here has moved above the zero, and this trend, we're looking for that trend to continue. Now if we look at gold, it's exactly the same setup and story. It's above the zero, and we're seeing that flat out rejection, and the new bar is moving up, and we're seeing this bar here. We're hoping to see a break of that high here to feed that continuation and see further buying with it. And it's the same for the German 30. We can see yesterday's bar, strong support all the way down to that 14,970.68 area. We do have resistance to look at up here at 15,192. But what we're looking for is if today buyers get back in the market and break this previous high, we'll look for a continuation to occur. Now we do need to keep in mind that we have some pretty decent news coming out early tomorrow morning at 6 AM Australian Eastern Daylight Time. That is the federal funds rate, the FOMC, and the FOMC press conference. So we're looking for a 0.25 interest rate increase, and this is the first really of a series what we'll be looking for of 0.25 increases. And through the statement, basically we're hoping that the Fed will continue to lean more towards the dovish side, and that they will continue to tell us that maybe inflation is not under control, but things are not as bad as they thought, and that we will continue to see 0.25 increases. And hopefully, if that message is dovish, we will continue to see support for equities markets and risk markets, and we'll see further buying. But I don't know if we will see a move above. We'll see what happens in the London session today. We do have higher leads from last night's New York session, and we'll just see if the Fed can back up this signal that is continuing to develop at the moment, and if we'll see a break higher beating this resistance. And the same on all of these markets that we've just discussed here. Gold will like to see a break of this resistance here, and maybe a test up or a break of this resistance and high at this point. And the same on the euro. There's not really too much resistance there, but if we do see continued buying, we'd like to see a test of this point here up at 109.17 to 0.920, and maybe a break, and a sign that this trend is going to continue. So we're going to continue just to watch this CCI based indicator continuation system, and just see if there's any merit there. So if you did enjoy this video, please feel free to subscribe, and keep an eye out for that news that's coming out tomorrow morning. That's the main piece this week. And we also have ISM manufacturing PMI, and the jobs job opening, and ADP non-farm employment change as well. So that's it for this video. We really appreciate your time. Thanks for watching. Wish you good trading, and enjoy the rest of your day. And yeah, as mentioned, if you are enjoying our content, please subscribe. We do have a lot of different presenters and analysts during the week, so everything is, it's fresh, and there's different opinions and ideas coming through. So thanks very much, and bye for now.